Hey folks, welcome to the weekly market wrap-up video here. My name is Gareth Soloway, Chief Market Strategist at VerifiedInvesting.com. So this morning we started out with a bang. The market's again reacting negatively to Trump and comments that he might be looking to charge Apple 25% on every phone that is produced outside the United States. In addition, Trump threatened to levy 50% tariffs on the EU because no deal was close to getting done. And again, that threat sent markets reeling early in the day. We saw the S&P down 1.5%, the NASDAQ close to 2%. However, once the markets opened, they began to grind neutral to higher pretty much the entire day, although there is a little selling going on into the end of the day here. Now, really, what was the key? I mean, why did markets calm down into the open and throughout the day? The answer is Scott Bessent. Treasury Secretary Scott Bessent said, don't worry, guys. Deals are coming. Major deals are coming. And that calmed the market's nerves, especially the fact that we have a 3-day weekend, holiday weekend coming up. People are already leaving for their holiday. So the volume has lightened up and people are back to essentially buying the dip. But nonetheless, we are seeing a little bit of profit taking into the end of the day, as there are some people that bought earlier that do not want to hold into the 3-day weekend. All right, let's dive into the charts here. This is the S&P 500 intraday chart. You can see this is where we opened lower on the S&P. So we opened around 57.84 on the S&P, and then right out of the gate, sideways to upside chop, plateauing in the early to mid-afternoon. And then late in the day, we're starting to come in just a little bit with the stock market set to close in less than an hour. So again, this is where you get to the point where there will be some investors, like I mentioned, that say, hey, listen, who knows what Trump will say over the weekend? It's a lot of risk. Is he going to threaten to go back to 145% tariffs on China before the deadline is in about 2.5 months? So they're going to be more apt to say, all right, let me jettison from my positions going into a 3-day weekend and then reevaluate come Monday morning. Daily chart, taking a look at the S&P. This is a level that I gave you guys that was going to be key to watch. And we have seen the S&P after its monumental rally up into it. We stalled right here, basically just underneath 6,000 on the S&P, and have essentially pulled back to a low today, like I said, around 5770 or so, 57,770. Now, I still think there's more downside near term. First level of technical support is going to be at 5660. That is a gap fill, as well as a pivot point right here and a pivot point right here. So that's how I do it, folks. I simply look for the levels where there's going to be technical support. In this case, as the markets come down, and you're essentially looking for support again between 5680 and 56, maybe 65. Right here, gap fill, pivot point, and little high area. That, my friends, should be good technical support. So that'll be next week, the level that I am watching. And that's really where we're going to have the big battle between the bulls and the bears, right? So you're going to look at a situation where the bears are going to try to push this down here and break this level to the downside. And then on the other side, you're going to have the bulls trying to hold the technical support. And this will be where there will be a big battle, most likely, for which direction will win. Are we going to pull back and then leapfrog and surge back above and go back to the all-time highs on the S&P at around 6150? Or do we break this and start to catapult down to next support around 5450, potentially even down to 5300, or even down to the recent lows? And listen, as a technician of the charts, you look at that and you say, I'm going to reserve judgment until I see what happens there, right? And so many of us are cued into making judgments, whether we think, oh, the markets are going to drop like crazy, or they're going to just rip off and rip up and go to new all-time highs. But in essence, no one knows. And the best thing we can do is wait for the technical support to get hit and then start to evaluate every minute, every hour, every day following that. Does it look like we're setting up a bear flag off of that, which would imply probability favors the downside? Or are we snapshotting right back to the recent highs and headed for an all-time high on the S&P 500? Okay, so again, the point being is that generally human nature is to make assumptions, but the best traders in the world follow the charts and let the charts tell them what is most probable, while always understanding that probability is never at 100%. It wouldn't be a probability if it's at 100%. It would be a sure thing, and there's no such thing in investing. All right, so back to the charts we go, flipping over to the QQQ. Qs are up off of their lows on the daily chart, but just the same, we've pulled back a little bit. Where's your first technical support going to be on the QQQ? Right in this range. Just like the S&P, this is going to be a key gap fill area and pivot point. So again, if we come into here, that's where your battle on the QQQ will be. That's at 493 down to about 490, right in that vicinity. First battle between bulls and bears where there will be key factors. Now, this is interesting. 10-year yields. 10-year yields this morning were down pretty sharply. They have started to rebound here a little bit, pushing back up. We're going to have to watch and see where this goes. Now, you guys know if you've been following along in the game plans this week, I still have an upside target of 4.74 to 4.75%. And again, simply put, I'm finding a high pivot to a high pivot. We had a consolidation here. We broke out. We retraced to the scene of the crime, pushed up, pulled back, broke out again. So yes, we could retrace here, but ultimately this is the level we should go to before we see a major potential, major corrective move on the 10-year yield. And to me, at least, that implies most likely further downside since higher yields are problematic for the market. The US dollar continues to sell off. And again, the dollar, listen, if you've been following along, as soon as we broke below this trend line and confirmed, you can see major low to major low. Look at what happened right here. Hit it, bounced, broke down, confirmed. Once you confirm a breakdown below a level, it is now a confirmed break. And that means this line goes from support, which it was support over here, and that's where you got the big bounces and then the smaller bounce. Now this is major resistance. And look at how price on the US dollar rallied back up into that and then was rejected. Why was it rejected there? Because this was support. We confirm below, it now becomes major resistance. Major resistance, by the name major, tells you that the probabilities of rejection are extremely high. And look at what the dollar's done since then. We're coming all the way back down. We'll have a little support here, but honestly, I think we're going to go lower. I do think we are going to go lower here. We might get a small bounce at this low, this double bottom low, but my guess is we're headed down to about the 96.80 level here. And then eventually, I think we're at least going down to 94.5, major high pivot here and major level here, and even a low little pivot right there. All right. So again, the bias on the US dollar is weak. That generally will be bullish for something like gold, maybe bullish for Bitcoin as well. But Bitcoin, again, trades like a risk asset. But let's jump into gold real quick here. Gold is having a great move today, up $70 and change. But look at where it is. I put this trend line in earlier this week and said this is your most likely target zone before it hits resistance. You've now hit that resistance. So the question is, does it blow through that and make new all-time highs, or does it get rejected? The key is this, guys. This is a longer-term uptrend. So even though we're making high, lower, 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 low, we're still holding this upsloping trend line and this flat area. As long as price does not confirm below, let's say 31.45, then this is a bullish consolidation pullback before a further breakout. If we were to get here and confirm below here, now you're talking about a deeper correction. Then we'd be talking about below $3,000 at minimum. But right now, the bias in the midterm, and listen, we could still get a short-term 1 day, 2 day, 3 day pullback. But as long as we don't get below this level, then this is, again, expected to eventually break out to the upside on gold. Speaking of which, silver having a very strong day today, up about 1.4%. I did go long silver early this week on the breakout here. You can see the consolidation bull flag right here off of this up move. The breakout here, the confirmation, there's your retrace to major support. It bounced, and now it's pushing up. I do think on Monday or Tuesday, we probably find ourselves around 34.50. And then the question is, can we break above that, which I actually do think is possible. We could pull back for a day or two, but my guess is we're probably heading to 37 to 38 on silver. All right. But again, I did go long. I even bought some calls in my smart money options service, and we're in the money very nicely on those as well. And I'm looking to get paid pretty nicely on those call options over the next week or two. Now, the only thing you don't want to see is you don't want to see us reconfirm below this line. As long as that doesn't happen, the bias or probability remains strong to the upside. Let's flip over to Bitcoin. Bitcoin today is showing itself to be a risk asset. What does that mean? Well, when the stock market is down, and it is down today, although it's off its lows, Bitcoin is down as well, but off of its lows. You guys see what I'm saying about that? Now, listen, I'm still thinking Bitcoin has a little bit more upside. So be aware there's a major trend line going back to 2017 to the first high pivot in 2021 to the exact high in 2021 November. This was your bull market high, bull market high. Look at the corrections after that. And then here, first hit, pullback, second hit, pullback, right off of that line. So I'm not reinventing the wheel here. All I'm saying is that if we hit that, that should be a pullback zone. Now, listen, is it possible we come this close and pull back? Anything's possible, but all I'm using is past history to dictate my probabilities, and therefore I got to assume there's at least a decent chance we tag this trend line here on Bitcoin. A couple other stocks in motion. Apple today getting hammered, down 2.75%, was down as much as 4% early in the day. This is again off the threat of President Trump to tariff Apple 25% on the iPhone if they choose to make any iPhones out of the US. And let's be clear, my guess is that's a negotiating tactic, right? So he's not really expecting them to make 100%, at least I'm thinking that, but he wants the commitment that by, let's say, 2027, they'll make 90% or 85%, something significant in the US. And then he'll say, okay, well, as long as you meet that, then no tariffs on the iPhone. And again, I think it's a negotiating. That's my guess, at least. Now, does that ruffle feathers in China? Probably a little bit. They make a lot of them. Maybe in India, I know Apple was talking about moving a lot of their build of the iPhone into India. And I know Trump was not super happy about that as well. But again, time will tell. But again, Apple down today sharply on the back of that. And if we look at Apple, where's your technical support? Well, clearly we have this area right in here, right? I mean, look at this. This is pretty cool to see. So you have this low right here, right? We draw a line right through there. So you can see this low, the close of that candle, the low there and there. What that tells me as a technician is that we're basically trading in a sideways consolidation zone, right? So here, down, up, down, and we bounce. But the question is, which way does it break? If we break here, you're going all the way down to about 170. If we can go up and challenge this and break this, there's actually limited upside at that point, only to about 223.75. But nonetheless, right now, this is what we would call range-bound trading inside a parallel channel. And the bigger question is, which direction does it break? And then you can start isolating down the next level. NVIDIA is basically flattish to slightly negative, down about 75 cents today. This company reports earnings next week. So that is going to be huge on this stock. All right. In fact, it's going to be huge for the entire market out there. So keep an eye on NVIDIA, folks. NVIDIA, again, earnings are next week. I will cover them in depth. Even on Monday, we'll start looking a little bit closer at this chart to see if we can gain an edge. One thing we have to see is look at this trend line here. Look at the beauty of this, folks. I mean, this is why I absolutely adore charts. You can see your low here in 2023, tagged it right here. Then where did we tag it again? Right at the recent low. And so what this does is it gives us a very key level that if we started to fall back, there would be support here. It also tells us that if we ever break this line, that would be huge downside. In fact, I have it priced out and calculated out that if we were to break this trend line in the future, NVIDIA likely goes all the way back to about $50 a share, which would be pretty nuts. It would actually be basically $1 trillion market cap at that point. It would bring it back to about a $1 trillion market cap. Now, on the upside, if it pops on earnings, after this big rally, you're not that far away from the all-time highs. You're only basically about $20 away, actually less than, about 20 bucks away, a little more. But there'll be resistance there as well as here. There'll be a couple spots along the way. These would be your three resistance: high pivot, and double top, triple. This would be a triple top. It's currently a double top. But if we hit it, that would be a triple top. Okay? So keep an eye on that one. Now, otherwise, we're still seeing some pretty good momentum in the supercomputer stocks. For instance, QBTS was a big runner this week. Look at this today, guys. It had this parallel. It just gapped above it. That's called what we call a river theory, when it gaps above. Instead of pushing through, which is very hard to do, price just gaps above and it kind of pushes and continues up. But again, these type of moves, these parabolic moves, if they go a little bit higher, something like this would start piquing my interest in terms of being a short. It's a massive move just from the 7th of May. from $6.87. It's now basically at $20 per share. Huge, absolute huge move on that. Another big story is uranium. Look at uranium, guys. What a move on URA, the uranium ETF. Huge move piercing this. It looks like it wants to go up here. This to me looks like a blow off top. So just be aware. Maybe it gaps up on Monday. We'll have to see. Maybe uranium has one more day to up to this level. But when you have a grind like this, a steep move up, and then you have this big pop at the end, historically, that's what we would call a blow-off top or near blow-off top, and that's usually the beginning of the end of the move. So again, maybe it goes a little higher, but then I would expect a pullback. Needless to say, so much talk about generating so much energy from small reactors that are going to be built all over, apparently. At least that's what we're hearing, whether it's Google building some or these other places, and that is sending uranium skyrocketing here to the upside. Incredible move to the upside on uranium. All right, looking at oil real quick. Let's see what oil has in store for us. Oil is trading up on the day. Only a little bit of a move here to the upside. Oil continues to just chop. You could make a case there might be a little inverse head and shoulders here, so I'm just keeping an eye on that into next week. It has not triggered yet. To trigger, you would have to break the neckline on a daily closing basis. So you can see here's your armpit low to armpit point here, and then if we pull back, we break here, then it should trigger. But again, it's just a pattern that I'm keeping an eye on here. If this did play out, it would send us actually just above this level back to about $67 per barrel. Not a huge move, but again, I would look to short into that if we did rally up there. Natural gas, let's take a look at nat gas here. Natural gas is having a little bit of an uptick here. Resistance remains there. Look at that beautiful trend line. Support, breakdown, confirmed, retrace, major resistance, rejection, support here. Look at this beautiful trend line here. Hits support, bounces back, rejection again, and now we're hovering in the middle there. It's really remarkable to chart this stuff. Just like look at the high over here. High pivot to high pivot gave us this exact high, and that was a daily topping tail right there. All right, so listen. There's a lot going on in the market. The markets right now, if we flip back to the S&P 500 and go to the 10-minute chart, you can see that, again, we were starting to roll over a little bit on the S&P, but really it's more flatlining than anything. It's really flatlining at this point on the intraday S&P chart as we near the end of the day. And really, all in all, you look at this and you say, okay, markets to the most part, even though we're net negative on the day, it's not by that much. And the markets, again, at least for now, are still willing to believe Scott Bessent that even though Trump is making these 25% threats against Apple's iPhone and 50% tariff addition to the EU on June 1st, basically Bessent is walking that back. And the markets, at least into the holiday weekend, appear to be giving the benefit of the doubt to Bessent and saying, okay, he's the guy that's really doing this or pulling the strings. There'll be some deals that are announced. And that, again, appears to be what we're seeing here. But nonetheless, guys, you got to stay diligent. You got to follow the charts. Remember, the charts, my friends, are the only thing, to me, that speak the truth, okay? If I was following social media, I'd lose all my money. If I was following mainstream media, I'd probably lose most of my money. The charts, to me, they're unbiased. They have no agenda. A chart is just green and red candles. Right? It's bull flags, it's bear flags, it's topping tails, it's bottoming tails. And when you realize that a chart is made up of just pure and simple probabilities based off historical pattern formations, there's something very freeing about that. There's something that says, hey, listen, this might not work out, but if I can see three factors, I can get to a 75-80% success rate and then go from there. And then say, okay, well, if I do 10 trades, I'm going to win, 7.5 to 8 times every 10. I know I'm going to have my couple losers. I certainly do myself in trading, but I want to stick with the probabilities. I'm not getting fooled. I'm not getting emotional and get all hyped up about an investment. It just simply is the charts. And that's what we do here at Verified Investing, folks. And that's what I want to continue to do for you guys. Really, my goal here in my remaining few years in this focus of doing what I do here at Verified Investing is to teach you guys, to make sure that when I leave, you guys are confident enough and know what you're doing to be able to ignore the hype, ignore the FOMO, the FUD, whatever you want to call it, and focus on the charts and make a great financial future for yourself. So as always, guys, I only do this because you guys support me. and you support Verified Investing and what we are trying to do here, really bringing mainstream what I've learned from institutions and being in the institutional side and all that stuff. This is what they do. They play probabilities, folks, and then they use muscle, which is money, to really get things in their direction. But there's nothing that says retail can't do that. The only problem with retail investors is that they go on X or they go on Instagram or they go to the mainstream media to find out what the next hot thing is. And by the time you're hearing it there, I guarantee the big institutions are already in the position and they're just saying, thank you for being our exit liquidity when this thing continues to run because everyone else is buying it. You don't want to be the exit liquidity. I would much rather miss a trade than hope that I'm not the exit liquidity and jumping in late. There's always another trade coming around the corner. All right, you guys have a great weekend. Thank you so much, so much for being members or being supporters